As we approach the end of 2016, I'm sure a lot of you are going to be casting your minds forward and thinking about all of the things you're going to do with your trading in the new year. And a question I get all the time related to that very thing is whether we should be setting trading targets on a daily or a weekly basis based on the amount of pips that we want to accumulate, or our financial performance, or even the number of trades that we should be opening in that set period of time. For example, traders ask me if they should say like, okay, I've made £200 today, that's my target, so therefore I'm going to stop trading for the rest of the day. Or for example, I've opened now 5 trades in this day and my maximum each day is 5 trades, that's my target, so I'm going to stop trading for the rest of the day. And I know that a lot of you watching have asked me that question before, and you know what I'm going to say next. So shh, don't you dare spoil it for everyone else.
You're my special friend.
Basically, I always explain my view on this topic with a bit of an analogy. Well, actually, it's a bit more than just an analogy. It's based on a study that was conducted in 1997 on taxi drivers in New York. And what this study found was that there was some really irrational behavior going on that was leading to some very irrational economic strategies. So the study found that, surprise, surprise, when it's raining or there's bad weather, the demand for taxis in New York goes up. Of course, you want to get your hair out the rain, right? But here's the funny thing. At the same time, when it's rain, when there's bad weather, and the demand is skyrocketing, the actual supply of taxis is decreasing. But strangely enough, on the days when there's good weather, and therefore the demand for taxis is lower, because people are quite happy wandering around outside in the sun, the actual supply of taxis on those days was much higher. Strange, right? Well, what the study found was that there was some weird economic rationalization going on in the minds of the taxi drivers that, in their eyes at least, justified the reasons for doing this. So the reason was that the taxi drivers had a daily income target, and they would basically work the hours needed to hit that income target, and then they'd bugger off home. So this meant that on those days when there was really good weather and demand for taxis was lower, they were ending up sitting there working an extra long day because they might have to wait a while before they get a passenger. So they're willing to work long days, long boring hours of waiting around for someone to actually pop in their taxi and pay them. But on the days when the weather was bad and they have a constant stream of passengers, they hit their income target quite early on into their session, which meant that they were able then to go home. They only maybe worked a couple of hours because they had passengers one after the other. Now that might seem like quite rational decision making. You've got an income target, you hit the target, you go home. But actually when you think about it, it's extremely irrational. If it's a slow day and you're having to wait ages for a passenger, you might as well call it a day and head off home and go and do something else that's a lot more productive with your time rather than waiting around.
Have fun, 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 fun!
And on the other hand, if there's a constant stream of passengers and there's a lot of demand for your services, your taxi driving services, then you might as well work all the hours under the sun for that day and milk the opportunity as much as possible. So what happens if we put this in perspective with our own trading? What happens if you set those daily financial targets for yourself? Well, just like in the New York taxi scene, the markets, the financial markets, are also going to provide you with days that suit your strategy a lot better, and you're going to have a lot bigger and better opportunities coming up. But on those days, if you have financial targets that when you hit those, then you finish, you're going to be finishing your day really early rather than milking the opportunities that are being provided for you on that really good day in the market. And what about those long, slow days when the market's not really doing what you want it to? It's maybe consolidating and only moving in little tiny ranges all the time. Those days, if you have a financial target each day, you're going to be working these long hours and it's going to be really frustrating. You might even start to get impatient and start seeing opportunities that aren't really there. When in fact, on those days, you should be cutting out early, finishing your day early and focusing more of your attention on the days when the opportunities are there. If you sit there waiting for opportunities to come, we all know what happens and you end up sabotaging your own trades by accident. I prefer to trade a lot more often on days where I see that the markets are being what I call the Goldilocks markets, where they're just right. And I actually released a video about this in February this year, so really early on this year. The link's in the description box. Go and check that one out when you've got some time. However, When it comes to these trading targets, I've got 2 points that run counter to everything else I just said. Hey, don't judge me. 2016 has been the year of contradicting yourself.
Can you guarantee that's going to go to the NHS?
No, I can't, and I would never have made that claim.
Hang on a moment, that was one of your adverts.
Well,
you've been hearing me say it's a rigged system, but now I don't say it anymore because I won. Now I don't care.
It's obviously in fashion at the moment. So firstly, although I don't have strict targets for every day, every week, every month, I do have overall financial expectations for each month or each year. And this is what I talked to you about in the very first lesson of the mini-series that you get for signing up for our free Inner Circle mailing list. The link's in the description box, and also at the start of our online course. So basically, this allows you to kind of reverse engineer what you need to do to achieve those financial expectations. So whether that's with how actively you are with your strategy, what your working hours are, and that kind of thing. And if you have that expectation each month and you realize one month, so let's say November, I wasn't hitting that target, it doesn't mean that in that particular month you need to push yourself further and try and open more trades. You know that's going to end in disaster. Instead, it just means that the next month, or if that continues, if it's a trend that every month you're below your financial expectations, you can review what you're doing and see if you need to make some alterations to your strategy or to your working hours or even to your expectations. So it's almost like a benchmark each month that lets you know if you're performing how you would like to. It's not a target for you to hit, it's just a benchmark so you can analyze whether you're in the right vicinity of how much money you should be making or not. And the second slightly contradicting point is that although you don't want to set a target number of trades each day, you might want to cap the maximum number that you can open each day, because you need to take into account your ego depletion and your decision fatigue. And this is something I talk about in much more detail in our free ebook, How to Trade Like a Traderpreneur. So I won't go into all the details now because I'll just be wasting your time when you can go and look at it there. But basically what it's saying is that we have sort of a maximum level of efficiency every day, and every time we make a decision, that's reducing and reducing. So after a while, then your ability to make the most efficient or the best decisions to the best of your ability is less chance of that happening. You haven't got the same decision-making energy as you have earlier in the day. And in particular with trading, it was found to be for the average person between 2 to 3 trades before the decision fatigue really starts to take hold. So although you might not want to have a target for the number of trades, after 2 or 3 trades, or whatever you find the optimal amount is for you, you might want to consider reducing your position size on any trades above that number each day, just to make sure that you're being safe and you're not exposing yourself to mistakes. So traders, I hope that clears up all of your concerns and questions on the topic of targets. Now, if you've got any questions or comments related to that, leave them down below. Otherwise, just get cracking on your planning for next year. Guys, if you like this video, make sure you hit the little trading glove thumbs up down there. And if you want more videos about learning to trade, make sure you subscribe to the channel, because I want to see you back here next time for the next video, which is coming very soon. I appreciate you watching. You take care, and I'll see you very soon. Bye-bye.
Thanks.